Mauritius, one of the most dynamic economies in Africa, a success story of political, social, and financial stability. Think about it. We had nothing, no minerals, no oil, or precious stones. So what made this success? You won't find it here or here. Come closer. It's a story about people.
If you ever call my name, I will answer.
It's about our openness. It's in our DNA. Proud of the multicultural origins of our people from Europe, Africa, and Asia. Our capacity to live and work together, our agility to do business with the world, our entrepreneurial drive and resilience define who we are. We are MCB.
You're stranded in the rain, I will shelter.
And in financial news, the unique global offer in financial expertise of MCB, the leading bank of Mauritius since 1838, has made them one of a few investment-grade banks in Africa, weighing in an over $2 billion capitalization.
And just like Mauritius, our real value lies in our people and in our commitment.
If you ever call my name, I will answer.
Today, our natural openness to the world allows us to empower new ventures in Africa and beyond. Our unique global perspective opens endless possibilities for international business.
Hello and welcome back to Africa Forward Together. Thank you for joining us for our fourth and final webinar, which will be a meeting of minds between thought leaders within our AFT community and beyond. Over the past 3 webinars, you have been able to listen to key insights and observations from MCB leaders, from our keynote speakers from Orange Bank Africa, who, if you recall, told us how they launched a mobile-only bank in the middle of a pandemic, and how technology will be the key for the future of African banking and financial services. Later in our second webinar, we tackled the key topic of digitalization and shared our experience and latest regional trends with Jean-Michel Félix from MCB Consulting Services and Kevin Siba from ICPS, who talked about the key factors to consider on this digitalization journey and where to start and how do we progress on it. Finally, last Tuesday, we discussed the acceleration of payment trends and the challenges it poses for banks, especially with regards to security. For that webinar, we had the pleasure to welcome Stéphanie Ningsung, the head of cards at MCB Ltd, and Christine Durand and Dinesh Sumra from ICPS. Well, today for our final webinar, MCB is pleased to welcome the CEO of MCB Ltd, Alain Law Min, and 3 distinguished and acclaimed guests to share their insights and thoughts on 3 main areas. These are: how do we cope with the current crisis, and what are the key messages, what are the key measures or recommendations that our guests today are taking or are recommending. Secondly, how do they intend to maintain continuity amidst the current chaos? And finally, how are they and their organizations balancing innovation and risk for future growth going forward? True to the philosophy of Africa Forward Together, we believe that our own AFT community holds many of the answers and insights for the way forward, through experience sharing, collaboration, and of course, partnership. Well, today we will do just that with our panel discussion. And as usual, our audience, you can submit your questions or comments through the GoToWebinar platform. So please do not hesitate to do so. So for today's session, I am honored and pleased to welcome first Dr. James Mwangi, the Group CEO of Equity Group Holdings PLC. Dr. Mwangi's leadership and vision to drive financial inclusion, and be an agent of social and economic transformation in Africa is well documented and recognized. His transformation of the equity building society into the equity group that we know today is a success story and a business model case study around the world, including at Lagos Business School, Stanford University, Columbia, MIT, and Harvard, where he occasionally is a guest lecturer. Only today we learned that the Equity Bank Group ranks number 7 in Africa in the newly released 2020 ranking by the banker in the overall category of the best performing banks in the region. So a great achievement. He was the first leader from Sub-Saharan Africa to win the prestigious Ernst & Young World Entrepreneur of the Year Award in 2012. He was named the Africa CEO of the Year in 2015 by the Africa Investor Awards. And recently this year, he was awarded the 2020 Oslo Business for Peace Awards for his role in championing financial inclusion in East and Central Africa. Thank you for joining us, James, and congratulations on this recent accolade. We are also very honored today to welcome Dr. Diane Carosisi, a renowned regional statistician, economist, bank executive, and academic. She is the managing director and CEO of Bank of Kigali in Rwanda, the largest commercial bank in Rwanda by assets. She previously served as the Director General of the National Institute of Statistics of Rwanda. She was also the Chief Economist and Head of Strategy and Policy at the Office for the President of Rwanda. As a renowned academic, she is also the Deputy Chairperson of the Board of Governors for the University of Rwanda and sits on the board of the Rwanda Development Board. Welcome, Diane.
Thank you.
Our third guest today, which I'm pleased and honored to welcome also, is Mayowa Kuyoro, Associate Partner at McKinsey's Lagos office and one of the leaders of McKinsey's Africa's Financial Institutions practice. Mayowa has extensive experience across West, South, and East Africa, serving major institutions on topics which are related to large strategic transformations. She's passionate about the role that access to finance and advancing women's equality can play in Africa's growth and development, and has written several reports on this topic. More recently, she co-authored 2 very pertinent reports for our AFT community, putting forth recommendations on how African banks can manage the impact of COVID-19 and prepare for recovery, as well as a more specific one on Nigeria's fintech potential, which I highly recommend you take a look at. Thank you, Mayowa, for being here and for joining us.
Thank you very much, Aha.
And our final panelist today is Alain Law Min, the CEO of MCB Ltd, who is also the chairperson of the Mauritius Bankers Association. Since he joined the bank, Alain has successfully launched the leasing, factoring, and private banking services of MCB. And notably, in the early 2000s, he acted as the project director for a comprehensive business re-engineering exercise that put MCB on the path to becoming the bank it is today. Thank you for joining us, Alain.
Thank you, Avin.
So that's the introductions. So to come to our first question, which is about coping with the current crisis. And I would like to start maybe with Mayowa. Mayowa, in your position at McKinsey, and with your experience in the various regions across Africa, serving major financial institutions, you have had quite the front row seat to the industry's challenges this year. In your recent report, it sounds the alarm and puts forth quite worrying estimates about the banking sector's estimations for revenues and return on equity. So can you share with us some of your observations on some of the trends that you are seeing and whether there are any variations across the institutions you're working with? Over to you.
Sure, thank you so much. As I said, we had at the beginning of the crisis done some modeling and ran scenarios to estimate what was going to happen to banking revenues as a result of the economic contraction we're seeing as a result of the COVID-19 pandemic. And our estimates are looking at about a reduction of between 20 to 30% of revenues after risk costs, driven by higher risk costs. We're seeing a lot more potential for default with credit risk. We're seeing margin compressions and then also potentially lower volume. I wouldn't go into too deeply. In some countries, you're seeing banks release their half-year results, and we saw earnings estimates that were 90% less than what they had released this time last year. So you can really tell that it is not an easy time to be a financial institution, and as someone who's leading a financial institution, there's things to keep you up at night. And then we talk a lot about the financial aspect of it, but there's also, when you think about it, this is a crisis that has impact on both lives and livelihoods. So whether it's from a life perspective on how do you keep your employees safe, because financial institutions are part of essential services, to how do I ensure that I can keep my employees in a job given the significant hit to the bottom line. So this is one of the industries that has been the most hit by the COVID-19 crisis. But we do believe that there are some tools for banks to remain resilient during this time and sort of begin to restart and reimagine, what the banking industry could look like. I think this crisis, there's a saying that says never waste a good crisis. This crisis presents an opportunity for banks to begin to sort of reimagine what banking could look like across the continent, despite the challenges that we're facing.
Okay. Thank you. And Diane, regarding some of the estimates that Mayowa has put forward for the continent, I mean, we are talking about, for example, a fall in banking revenue of 20% or return on equity, which could be impacted by 5 to 15%. Are these trends that you can relate with for Bank of Kigali? And have you taken specific and notable measures to maintain resilience at your bank in this new normal?
Thank you. I think what Mayowa just said is felt across the industry. What we're seeing, although we've still been able to find some opportunities during the crisis, mainly financing some government projects to expand schools, etc. We've been hit severely by our cost of risk. That has significantly increased our provision, and this is reflecting what Mayowa just said. And as a result, when we look at our forecast for end of year, we expect to have a flat growth in terms of bottom line, mainly driven by a very high cost of risk. So this is, I think, something that you'll see across the industry. In terms of measures that we've been implementing to ensure we are resilient, I think it's mainly looking at our IT systems and how we're delivering our services. We've seen an increase by more than 400% in terms of digital transactions in value. So what we've been doing is work with our IT colleagues to make sure our systems are resilient, people can transact 24/7. We've had to make some emergency investments to ensure that people can work from home, have VPN access to the systems, actually give internet access to many of our staff for them to be able to work. So these are the things that we've been doing to make sure we can keep the lights on, but also try to find opportunities during this crisis. What we've done also as an industry is to constantly engage with bank CEOs, with the regulator, with even health experts, because banking services were essential services in Rwanda. So even during the lockdown, we had a couple of branches open. So we've kept this engagement on an almost daily basis, to adjust our measures to see how we can protect the safety of our staff and clients. And overall, I think this engagement has helped all of us to be up to the challenge and to raise up with the challenge and support all efforts to manage this crisis.
Thank you, Diane. And how about you, James? Do you echo Diane's trends regarding the upsurge in digital adoption regarding solutions and the ensuring that behind the scenes the IT infrastructure can follow? And have you taken any additional other measures to maintain resilience at equity businesses during this year?
Thank you very much. I would like to associate myself with the sentiments that have been expressed by Diana and Mayowa on and has played out as at that 30 June. The numbers of the banking industry reflect precisely the prediction in terms of top lines. But in terms of IT, we have come to appreciate that the COVID coping mechanisms and health protocols that are issued by various governments have prescribed a situation where banking stops being the place you go to what you do on devices. This has best been achieved through mobile technology and internet banking. And as a result, to enable customers to continue to access services while at home, support lifestyle as they cope with the health crisis. Banks have had to improve in the payment space and delivery channels that would enable customers to serve themselves or to onboard on self-service platforms. That has meant significant investment in IT, but more importantly is then coping with new risk baskets. We're moved from the operational security risk to more IT and cyber related risks, and banks have significantly invested. However, I think banks as major national champions also recognize that this crisis is not institutional. And like equity, we have teamed up with the Kenya government to try and support all the initiatives of containing the crisis, because we are affected like our customers have been affected. And equity has managed to mobilize $11 million and partnered with the government building up a fund of $14 million to support the health sector. And we have adopted all the 68 hospitals in Kenya that are dealing with COVID by providing them for a period of 18 months PPEs, so that once we secure doctors, then we know we have provided a second line of defense for the entire population, which our customers are a subset of. And essentially then beyond IT, banks have to cope with mechanisms that are defensive. And for us, we need capital and of course liquidity, ensuring we are defensive there, while at the same time adopting offensive measures to support customers to recover and, more importantly, to thrive after COVID. Thank you.
Thank you, James. And Alain, I believe this is a point that you touched upon in your first address during the first webinar, which echoes a bit the trends they are saying about the importance of interaction with the regulator. So has this been probably the most important measure that has helped MCB be resilient so far in 2020?
Thanks, Irvin. Well, I believe that in periods like this, in periods of crisis, you've got to be very agile. You've got to be able to interact. You've got to be able to adapt to the current circumstances. And obviously, the regulator is a key element of that equation, because through the regulator, there were a lot of support measures to our customers. But what I would say is been sort of quite key in the way we've operated has been driven by technology. We, unlike probably many countries, we went on lockdown 48 hours after the first case was detected. So it was quite brutal. And suddenly we were confronted with multiple challenges on multiple fronts and simultaneously. So what do we do? I mean, banking is an essential service for the community, and we had to react quickly. So how do we balance the health and safety of our employees at the same time trying to serve our customers? So I believe that the common denominator to how we've adapted to such a crisis and such lockdown has been technology and our people. Technology has enabled us to have 90% of our employees work from home, and also enabled us to look at a number of processes which we thought were quite heavy, so that we could actually support customers on credit. I mean, credit, we've heard a lot from the other speakers today, is that's the period where people need you most in terms of moratorium, in terms of credit lines, in terms of how we can continue to support each and every one. So credit is normally quite a lengthy process, and technology has enabled us to quickly develop tools that people can actually, without going into branches, have online application and be served as if they were in a normal circumstance. So globally, I would think with technology and with the right agility, adaptability of our people, and with constant communication with the regulator, which is required, because obviously all these support schemes have to be implemented and implemented fast. I think we've been able to serve the community, serve our customers, and able to get everyone on a smoother track than they would have if we were not equipped with the right tools.
Thank you, Alain. I think it is quite remarkable how the interaction between the regulator, like you all mentioned, and public authorities and banking institutions during this time of unprecedented crisis, how unquestioning it was. Everyone just across many countries in Africa, and we asked for some feedback. Not one has mentioned the interaction with the regulator or with public authority as a challenge so far in 2020. And this is quite remarkable. We did do a survey within our AFT community to ask them so far what were the main challenges in 2020. I think we can present them on the screen. And I think the results are quite reassuring in a way, but quite are very interesting as well. So cybersecurity, exactly, which is maintained from its topmost priority. So even with the pandemic, or maybe it has been heightened even more as our banks are going into the tackling increasing digital traffic, cybersecurity remains a major challenge, followed of course by expertise in IT and digital transformation, which was number 5 last year and which is now the second most important challenge facing bank CEOs this year. There are other aspects including cost of regulatory compliance and also change management in anticipation of future trends and technology expertise in the leadership team. Alain, you found these findings quite interesting.
Yeah, I think it's when you look at the comparison from one year to the next, it's changed quite drastically. Even if the number 1 has still stayed as cybersecurity risk and lack of related expertise has been consistently number 1. But what we can see on the priorities now is that 4 out of the 5 are technology related. I think it says a lot about how banks are having to cope today in a current crisis by using appropriate tools to be able to serve the customers. And I find that quite illuminating in a way to that banks, even if technology has always been quite prominent in their investment, in the way they operate, that this has become now the 4 out of the 5 top priorities. Number 4 is change management, and I touch a little bit around adaptability, flexibility, which is required when using technology. We'll talk probably about agile later on, but I think technology and people are the 2 key things that are required today if we want to be adaptive to the current environment and eventually evolve the business model that we will see in terms of less branches and more digital. The only one which has stayed well, which is non-IT, is cost of regulatory compliance, which is obviously the aspect around the regulator. And I believe that even with the crisis, that's still high on top of the mind among banks today in terms of how do we comply with the increasing complexity around compliance and it's the way we need to actually embed it in our organization.
Thank you, Alain. And Mayowa, as someone with, who has interacted with a lot of regional financial institutions, do you find these consistent with your own observations?
No, definitely. I think the theme, and everyone has spoken about it in one way, shape, or form, around agility, around sort of making the transformation to digital, is something that is quite consistent, North, South, East, West Africa. I think this has really been a moment where the lack of IT thereof is something that is game-changing and differentiate you from your pack. So I think, in terms of imperatives for action, ensuring that you have both, we talk about digital a lot, but both the backbone or internally, how we work in an agile, customer-centric, customer-focused way is important to marry and to match the view that the customers see, right? So it's important that we begin to think about digital as not only a channel, but really around how we interact and how do we engage our customers. It's something that has been a consistent theme across several different institutions. I think the second thing that has been quite consistent is also this concept around how do we begin to give credit and how do we manage our credit processes in an environment where up is down and down is up. So that's been another theme that has been consistent across the conversations that we've been having across the continent. And then thirdly, this theme, and I think one thing that has been good, we see a lot of the banks are the bad guys, but banks really stepped up in terms of dispersing COVID relief, in terms of even just coming amongst themselves to donate money to people, but also in terms of engaging the regulators. I think this has been a moment where we've seen a lot of regulatory engagement to try and figure out what is the best thing for the industry, but also for the country as a whole. So those themes have been very, very consistent across the continent.
Thank you, Mayowa, for these comments. The head of cards for MCB, Stephanie, she did mention how effectively, indeed, there were increased hacking attempts or phishing attempts during the crisis, which confirmed that cybersecurity remains a priority. I don't know for Diane, maybe this was a trend that you saw as well during the crisis this year?
Yeah, I think it's a trend that we've seen also increasing during this crisis, because obviously most people are now transacting digitally. So the bad guys take the opportunity of hacking and trying to take advantage of this crisis. So luckily enough, again, collaboration with, of course, our team in charge of information security, but expertise across the country, because again, there's not much expertise in that area. So the little expertise that we have in some few organizations, including government, have had to come together to see how they could work together to tackle this. So again, in this case, although we all acknowledge the lack of expertise locally, it was important to have the few people who have knowledge and expertise working together to support all institutions, be it banks, but also government. So this has worked very well for us. But I also want to emphasize on what Mayowa, but also Alain said. We've actually realized that we have very many physical touch points in the services we offer to clients. It can be credit, it can be card, it can many things. There are many physical touch points, and I think something we're trying to tackle now is not to see if we can eliminate or at least reduce these physical touch points, because now, and this is a trend that we also see in the future, people will be less much willing to travel, to touch things. They want to interact with the bank, with the government digitally. So this is something that we are working on. But probably to close here, I want to say that this is it's a human crisis in the end, and something that has really was striking to me and to many people was that the effectiveness of the response to this crisis was not very correlated to the level of development or sophistication or wealth of countries or institutions. So it's all about leadership and how countries or institutions have thoughtful and compassionate leadership. So this is what has helped us in Rwanda in this crisis, and I think we've handled it quite well compared to some other big powers that we've seen resounding failures. And I want to say, in a period of crisis, leadership is critical. Thoughtful leadership is more important than anything else. Thank you.
Very wise word indeed, Diane. And for James, I believe you're quite well known for thinking out of the box when resolving crises and issues. I do recall that in the early 2000s, you did, for example, partner with the European Commission, the European Union, for your computerization initiative. So in this type of crisis this year, where IT, cybersecurity remains a priority, how have you fared? And is it still would you say it's your main challenge?
I think, as we have seen, the banking industry has been affected by a couple of factors. The first one is convergence between telecommunication and banking, and that then has exposed us to the risk of the backbones of the telecom companies. The second one is our competition has ceased to be between ourselves, and substantially banks are competing with the big techs in every respect, and to a lesser extent to fintechs. And as a result, then technology becomes a tool through which competition is handled. And the third factor that has affected banks is demographics. And we are seeing that increasingly banks are handling young customers. And with the mean age in Africa being around 19 years, it tells us the customer we are dealing with is a technology savvy and to a great extent a digital client. And as a result, these three factors have driven banks to adopt aggressively and very fast technology to converge with the telecoms and to prepare to compete with the big techs. In the process, we have adopted technology very, very rapidly. And while technology is available, skills and competencies to deal with the technology and the risk of thereof have not scaled up that quickly, because it takes longer to invest in human capital and to almost upscale skills or to retool the skills of employees. And as a result, the banks are competing for very limited available skills. As we do this, we are increasingly realizing that it's not just any longer technology or digital skills. Now the biggest requirement is data scientists, it's data strategists, it's machine learning, it's analytics. And so essentially that dynamic of very rapid growth has affected the banks, and all of us are struggling. The fact that internet has become a major tool of us doing business has posed the fact that all of us are then on the internet highway, and all of us then become exposed to cyber risk. But the banks can be able to defend themselves. Where the biggest challenge comes is defending the customers. Once you expose the customers, we are seeing they become heavily exposed, and unless you restrict through controls, internal controls and limitations, then the customers become fully exposed. We are seeing social engineering, particularly in the mobile space, where customers are social engineered to initiate transactions themselves, to authorize fraudulent transactions themselves, have increased significantly. And so as a bank, the biggest responsibility we have is to enhance the capability and the competence of our customers in this new lane of digital lifestyle. Thank you, Abby.
Thank you, James. I think this is a very important point about, from the bank side, what measures we can take to ensure cybersecurity, but also on the customer's education side and providing them with exposure. This is very important indeed. Without delay, I wanted to tackle our second topic, which is about maintaining continuity amidst the current chaos. Something that is much harder than, I'm sure, than it sounds, because it's about to what extent can we maintain our current strategy, our strategic initiatives, the commitments, the big projects our organization had embarked upon, while there is so much uncertainty in our operating environment. With regards to strategy, I think the example, the case study of equity and its ambition to be in 15 countries by 2026, for example, is a very important and very interesting case study. And I would like to have James' insight on his experience in leading Equity Group, given its ambitious expansion strategy that has seen it expand into Uganda, Tanzania, Rwanda, and recently South Sudan. How does this strategy, for example, stand the test of 2020 so far? And how do you find the direction of equity going in the near future?
Yeah, one of the survival strategies is resilience. And every bank really puts upfront resilience as a capability and a competence for navigating towards the future. But COVID movement has really changed most of the assumptions upon which the strategy, most of the strategies were formulated. As Nana said earlier on, this has turned out to be a humanitarian crisis. We started with a health crisis. It became a social crisis because of the way it was being managed, particularly through social distancing, and making almost then quickly become an economic crisis. And as it became an economic crisis, it started to play on the balance sheets of the financial system. And that's where banks sit in. So essentially, banks have had to look back into their strategies and prioritize essentially supporting customers. If you look, most of the countries in Africa have had their lights on because of micro, small enterprises. But these were enterprises that were heavily and adversely affected by the COVID environment. And so banks carried the responsibility of keeping the lights of the economies on by supporting and ensuring lives are protected, but more importantly, livelihoods are supported. And the only way we could support livelihoods was to ensure enterprises survived and quickly recovered from COVID, and then support them to thrive so that we can reduce the humanitarian crisis that would otherwise come. And as a result, banks like Equity had to play a very defensive role, defending the customers to survive, defending the customers to respond and quickly recover from the shock and the negative impact. That whole process took a lot of energy from the strategy, particularly that of expansion we had. And we had, for instance, to halt our transaction with a Trasmala that would have allowed us to acquire 4 banks at one go, and say maybe we need to make a sacrifice to ensure we'll be remembered for the role we played in protecting lives and protecting livelihoods. That meant, for instance, as I said earlier on, devoting $11 million as a grant to the health system, while at the same time rescheduling and giving moratoriums to 45% of all our customers, so that they could take care of their employees and take care of those dependent on enterprises, while the bank could then be able to take that shock. Rescheduling 45% of your loans and giving moratoriums, like the private schools, we gave them 1 year. That's almost 12% of our entire loan book. When it came to tourism, aviation, we gave them up to 3 years. That then, of course, required more focus on managing the COVID rescheduled loans and supporting enterprises that bank with us so that they could be able to survive. They required more than a break. They required more than a moratorium. And so we enhanced our customer relationship management so that we could be able to be part of the solution for their survival and recovery, and preferably. But however, we also looked for opportunities. We said if some of the enterprises could not make it, could we see other areas that enterprises could survive? And for instance, in Equity, we saw an opportunity of reversing the import value chain for PPEs. And using the $11 million, we decided to support 106 manufacturers in the country to see the opportunity and produce for the 68 hospitals PPEs for 18 months. And that has really created a new manufacturing sector in Kenya. So that is the law that we said, yes, it's worth sacrificing a bit our ambitions, our expansion strategies, so that our focus could be less sharp towards protecting lives and livelihoods. However, of course, as a bank, because of capability and competencies, as was earlier said by Mayowa, you never waste a great crisis. So we saw that there's still good opportunities, and that allowed us to acquire BCDC in DRC, and merging BCDC with Equity Bank Congo gives us a chance to have the largest bank in that country and also diversify and further our achievement. The transformation to a digital bank has given us better experience. We have seen that our liability side has grown by about 20%. And a bank of our size, when it grows its customer deposit by 20%, then maybe it beats any initiative to opening a branch in a new country. So while we narrowed expansion into other countries, we deepened and scaled up our operations in the 6 countries we operate in. And the bank this year will register between 40 and 50% growth in balance sheet. Thank you, Abin.
So I was addressing Mayowa, who proposed in her report very specific recommendations for African banks going forward across 3 specific categories. So managing risk and capital, managing costs and streamlining resources, and also adapting to recent shifts in consumer behavior. I think it's very interesting that you identify these 3 specific measures that you recommend banks should adopt going forward. Would you like to tell us a little bit more about your thoughts on this?
Yeah, thank you very much, Alvin. So we, as we were writing the reports and we thought, what next from now? It's good to write about what's happening, but then at the end of the day, you need to prefer solutions and think about what's next from now. We thought about these in 2 axes, sort of actions to do now. So, restart post the crisis, and then also reimagine, long-term, how do you build financial institutions that last? And as you talked about, we thought that these are bold actions that the leaders can take to weather the immediate storm, prepare for the recovery, and address several long-term trends that are now accelerating. And the crisis really, as Dr. Mwangi has said, it's an opportunity to step back and to really reimagine the business models, the roles that banks play in society, which we saw quite a lot of shifts during the heat of the pandemic, and also an opportunity to conduct some long overdue reforms. And as you rightly identified, there were 3 areas or 3 big questions we asked ourselves. The first one is, how can African banks best manage risk and capital, both to face short-term challenges and to grasp the longer-term opportunities on the continent? I think this is one of the biggest questions and the biggest topics that has been discussed. The second one is really how to best handle resources and streamline resources and handle costs. We talked about the fact that revenues are going to be compressed due to higher risk costs, due to lower volumes, given the fact that customers' livelihoods have been threatened. So we're going to see, and we have seen a reduction in revenue. So how do you handle costs and streamline resources to navigate the crisis and to optimize the cost to serve? Across Africa, I think Africa is either the first or second largest in terms of cost to assets of any region in the world. So there's a big opportunity here to think about how do we restructure the way we serve clients. And then thirdly, how do we adapt to the recent shifts in consumer behavior, especially, the accelerated digital adoption, and how do we serve customers effectively? And also, I think we've talked about this implicitly, but actually explicitly, how do we expand financial inclusion? We're still on a continent where I think the last time I looked at the numbers, where I think roughly 60% of the populace is still excluded from the financial system. So how do we use the gains that technology has given us to begin to get down to the hard to reach customers in our ecosystems? On the risk and capital side, what are the new ways of looking at credit? How do we expand credit to not just the corporates and sort of the very, very high net worth individuals? How do we drive down the penetration of credit in our countries? How do we leverage technology to make better credit decisions? Dr. Mwangi spoke about the conversions between telcos, big techs, and banking. How do we use all of these technologies to help us make better credit decisions in an environment where there's paucity of data? So what are the smart techniques we can make to really we can use to really make better credit decisions? On the streamlining resources point, how can we bite the bullet of leveraging technology to reduce costs? So, as we think about expansion, does it have to be branches, which are typically more high cost models to serve? Do we use agency banking, which is, we did a rough estimate, it's about 25% of sort of typical bank branches. So how do we solve the distribution problem that we have in providing access to finance? How do we redeploy and reskill the workforce? We're going to have, using technology will free up certain individuals. How do we reskill them effectively? And then also how, I think this one is something that I'm relatively passionate about, which is how do we engage customers in a new way? How do we use mobile as more than just a channel? How do we really, really, really begin to engage them from the beginning of the journey to the end of the journey? And now that digital and mobile is almost now a buzzword, how do you ensure that the back end, the infrastructure, is supporting, you have the full digitization. As Diane had said, there's so many physical touch points. I want to do X, I need to come and sign. I want to get a card, I need to do X, right? I need to come to the branch. I want to sell, I need to come to the branch. How do we use technology? How do we use digital? How do we use the fact that a significant number of our population have a mobile device in their hand and they can transact, they can buy using mobile? How do we ensure that we're taking advantage of that and we're building our organizations in such a way that they can do it effectively? So I think there are a few this is a moment for us to really take a step back and reimagine what banking could be on the continent.
Thank you, Mayowa. And I think this point ties in also with Diane's experience at Bank of Kigali and her efforts when we talk about maintaining continuity amidst chaos. I think it ties in, the case of Bank of Kigali ties in well with our next question, which is innovation, because Diane has been spearheading quite a lot of change at Bank of Kigali recently, including the shift of the bank's focus from more traditional corporate segments into the SME space, which she's overseeing, as well as the digital transformation program at Bank of Kigali. So Diane, with regards to maintaining these reforms, these new strategic initiatives, these orientations, to what extent are these efforts consistent, or for you maybe a little bit in opposition with the new normal, the new operating environment that you find yourself in?
So thank you for the question, Alvin. Actually, the changes that we had started, I think this was end 2018, beginning of last year, when we launched the transformation program, I think are showing everyone how relevant it was then to think about this digital transformation. And, from the back end to, looking at the architecture of our IT, looking at the data, because we are implementing a data-led technology to have data from not only the bank, but all the subsidiaries into one warehouse where we are able to extract and implement some analytics journeys to be able to serve better customers. So when we were working on that, I remember at the time it was not very easy for me to convince the board. We had just raised fresh equity, and the objective was to support us during this digital transformation. It was not easy to convince the board that we're spending this amount of money on this transformation. And we had rounds of discussion about the return on investment, on this investment. And I remember I kept telling everyone, it's not even a matter of return, it's a matter of survival. And now when the crisis hit and, when the virus hit home, when we had our first case, and soon after, I think this was 7 days after, the government instituted a total lockdown. I had these interactions with my board and telling them, everything we're doing is actually not for the future, it's for now. We are not looking at the future. Today, we are looking at how we can operate in the present to make sure we can still serve our clients. So all these investments we are making are very relevant. In actual fact, we're seeing some gaps in our strategy because, again, of the physical manual touch points that we still have with our customers. We're trying to see how we can eliminate those in the near future. But also, I think it was important to be innovative during the crisis. What can we do to help our clients? As James said, we had the same situation, about 40% of our book unable to meet their monthly installments. And we had to be innovative. So how do we support these clients quickly? But what we also did was to tell other clients, because we knew everyone was facing cash flow constraints. We told everyone, you don't have to apply for a moratorium or payment deferral. If you have issues of cash flows, we understand this. But what we did was to waive all late payment charges for a period of 3 months. We told them, you'll pay as and when you get your cash flow, and we won't be charged. I think this is something that was very much appreciated. We are also looking at how we can be good and compassionate corporate citizens for the people that we serve, the communities we serve, to find us relevant during this crisis. So we worked with our board. We collected funds through our. We actually had to take a portion of our bonus scheme to donate to the communities because we have very many people, our clients and people in our community that were affected by the crisis. And we believe all these efforts were quite appreciated by our community. So when I look at the situation today and I look into the future, as Mayowa was saying, such a crisis will bring probably profound changes in the way people think, but also in the way citizens consume, both at work, at home, at school. So all, the way people live is going to be changed dramatically. So as a service provider that is putting customers first, you have to see how you adjust your services, how to provide more relevant services in this situation. I understand, and this has been a trend across the globe, that online services are going to increase. So we need to make sure all our clients are able to transact online, digitally. We also understand that things will change. My kids probably they haven't been going to school for the past 7 months. Probably in the future, I think everyone is now thinking how we can. We talk about remote work. How can we talk about remote education? This is probably something in the future. How are we going to enable this in the future? We'll probably see a lot of telemedicine in the future. So how are we, as a service provider that is putting customers first, going to enable our clients to access these services online? So there's a lot of innovation that is going to come in the next couple of years, and we need to have the right infrastructure, but also the right mindset to tackle these opportunities as and when they come, because we want to support recovery, but beyond support recovery, actually discover a new world of opportunities in the post-COVID era. Thank you.
Thank you, Diane. And Alain, for the case of MCB and innovation, MCB does have quite a good reputation for innovation. I was very surprised to learn from the head of cards when she talked that last year the bank had developed a pandemic policy, for example. How far-sighted was the fact that we did that? And also the adoption, of course, of digital channels meant that I think the bank probably managed to move quite quickly and adapt quite quickly to the exigencies of the new normal. Going forward in terms of innovation, what pointers do you have regarding MCB's experiences and the efforts we are doing going forward?
Thank you, Irvin. I believe you can actually thrive in a crisis, and there are enormous opportunities which has created that. First of all, on the customer side, and I think Dan has talked about that. It's today the behavior of our customers have changed. They're more. They want to use more of the digital tool, more of the mobile tools than they used to in the past, because obviously, with the crisis, with the threat of the virus, cash was less of more of a threat to each and everyone. But there's something which the softer part of it, which I'd like to stress on from internally. I think a crisis gives a sense of urgency. Urgency because you don't have 6 months to deliver something. So you've got to deliver within the week. If someone needs an online application, he needs to, within 2 weeks, within that we're going through. It gives a sense of, the crisis gives also a sense of purpose. I think James talked a lot about, why we were there helping the community, why we need ourselves to make sure we accompany our customers, save lives, save livelihoods. And I think that gives that sense of a purpose to each and every one focusing on it. And the third item is, I think each and everyone has got that sense of focus. So when we were on lockdown, everyone was really looking at specific projects and how we could help to deliver it in the best time frame. And as an example, we had when the government announced when the central bank and government announced the fact that we could have a moratorium for the households, our main concern was how could we cope with only 6 out of 40 branches open. So immediately we said the thing to do is to have an online application that people could apply on and then get a response as soon as possible. So I think that sort of environment, that sort of the environment that the crisis has created has meant that we are able to execute and innovate much beyond what we had initially thought it was possible. So I think that is key in the way we looking ahead in terms of how we're going to now have teams that would have that sense of urgency, that sense of purpose, that sense of focus to be able to deliver like we've done through the crisis or during the lockdown. And like what Dan was saying about digital transformation, which we've gone through it now for the past 2-3 years, I believe now is the big step in terms of how we're going to integrate that capability within the organization, having our teams that are technology teams integrated with our business team to be able to deliver to customers' needs. And that's what we're trying to work on right now in terms of agility, how we're going to create agility within the organization. And when it's a big entity, it's always more difficult to get, as I said, that sense of purpose, that sense of focus. So I believe that having agility integrated within each and every section of the bank, which we are doing first with our SME. As you all know, SMEs are more impacted, have been more impacted during that crisis. So we've now have an SME tribe who's working with its full team and delivering, which we've done recently. We've delivered the mobile app for SMEs. We've delivered the online application for an open account opening, online application for credit. I do believe that how we can, with giving capabilities to different sections of the bank who are closer to customers' needs, are able, with all agility, to be able to deliver on their promises to the customer. And I think that would definitely be where the future will lie in terms of innovating for the customer.
Thank you, Alain. So the integration of agility into, well, the business itself, I think this is a very important point. Thank you, Alain, and thank you for all of your insights. We are a little bit over time, but I think we're almost done. We do have some questions actually for our panelists from the audience. So can we have them on the screen so I can read them out loud? Okay. So I think this is a question maybe addressed to James and Diane. So to what extent can the big challenge of digital transformation, so again that big topic, benefit from collaboration and partnership within the AFT community? Have Bank of Kigali or Equity Group benefited from regional insight? So maybe Diane, maybe you can start.
Thank you. Very interesting question. I think this is a general trend. When there's a crisis of this magnitude, people tend to think inwards, yet sometimes the solutions can come from the region or even from the outside world in general. So for us, mainly, it's been looking at us, bank CEOs, through our Bankers Association, to address all the challenges that were brought by the crisis. So we've been looking at that together. And the good thing is I have some of my colleagues that are part of bigger groups. The CEO of Equity Bank Rwanda is a friend of mine, and we've been engaging constantly on this. And because of these regional banks that operate within Rwanda, we've been able to also access the knowledge in these banks to understand how other banks, other countries were dealing with these challenges. But generally, I think these forums have enabled us to get a lot of knowledge and to benchmark ourselves with what other countries in the region are doing. But I'm sure Mwangi, who heads a group that is regional in nature, has more insights to share. Thank you.
Thank you very much, Avin. If you might jump here, I think the digitization to a great extent is only successful if there is collaboration where all partners and stakeholders accept open, interoperable systems, because it's the flow of support of livelihood, like economic activities, lifestyle, that truly make digitization possible. It is when you reduce incidences of turning back to cash that digitization can be said to be successful. So for us, what we have done is to embrace that party infrastructure. We have adopted open systems. We've become interoperable with everybody. So we have interfaced with all the telecoms in the region. We have interfaced with all the banks. We have interfaced with all the global card networks so that we allow a free flow of digital money. The second thing that we have really embraced is digitizing retail commerce, because that is where the limitation is. Ultimately, people want to play at the retail commerce level. And until we digitize the retail commerce level, where payments, we move away from cash payments to digital electronic payments, then digitization will never be complete. So that's the approach we have done, and we have championed that cause. And I'm glad that has been very well embraced within the region. And we can see, for instance, at the moment, 87% of all our transactions are on mobile, and 98% of all transactions are outside our business premises. They are on third-party infrastructure. That is when then you start seeing success in digitization.
Thank you, James. I think we have time to squeeze in maybe one last question before we end this webinar. This is a question I think maybe addressed to Mayowa. So it is as follows. The challenges faced by African banks, where mobile payments and banking solutions have a relatively greater adoption rate than the rest of the world. So I think the adoption of mobile payments and solutions. These challenges may not necessarily benefit from solutions and structures designed for European or Asian markets. So to what extent is McKinsey able to provide native solutions for the African market? Over to you.
Thank you very much, Ravin. I do agree with the premise. Our solutions are non-necessary. What we need for our to solve the issues we have on the continent should not, are not coming from outside. I think one of the most popular solutions we've had for is M-Pesa in Kenya, and that's now a case study that you read everywhere in the world. So it's Africa to the world, right? So look, I think we are part of an ecosystem of invested stakeholders that are looking to what are the ways we can really begin to solve some of the infrastructure, some of the talent, and some of the other issues we face on the continent. And I think together with more and more forums like this, where all the stakeholders come together, we can really build something that can help push our continent along its development path.
Mayowa. Well, I think this is the end of this webinar. I'd like to thank Dr. Diane Karusisi, Dr. James Mwangi, Mayowa Kuyoro, and Alain Law Min for taking the time to talk with us and to share so many interesting insights and observations. And thank you to our audience for your questions and for taking the time to attend this webinar on the challenges facing African banks and the measures that the AFT community can take to develop resilience and thrive and adapt in the new normal as well. I believe the AFT community, I think it's quite evident that we have our work cut out for the next few months and years. But as usual, through our interaction, communication, sharing of experiences, through collaboration and partnership, there is no doubt that we will be resilient and emerge on the other side stronger, better, and of course, banks, the actors of a more prosperous Africa. So from all of us here at MCB, we hope that Africa Forward Together has been insightful and interesting and of some value to you. Remember, as usual, we are always a phone call or an email away. Thank you very much and have a great day and goodbye.
Thank you.